Welcome, guys. Good evening, and welcome to another edition of Market Session today. My name is Peter Akinola, and I'm so excited to welcome you all to this session tonight. So, in this session, we'll be looking at few instruments, few pairs in the forex market, and then if we have other requests within our time frame, we'll also check them out. So sit back and enjoy yourself tonight. Please confirm you can hear me clearly and you can see my screen. Please confirm my voice, my audio, and my screen before we get started. Okay, so welcome back. Okay, that's it. Let's get started. So I'm going to pick today's analysis starting with Euro USD. As we can see on my chart, we have, okay, let me go back to what we have earlier. Let's go to 1 day time frame, to the daily time frame. It's obvious that, sentiment on this pair is bullish. So we can see, and then we can see that even the last daily candle closed bullish. I mean, what I want you to see basically, even on 4 hours, is the rejection that we had under 1.09, 1.0955. Look at those rejections. So look at this. Just take a look at it. So if you were going to take this trade actually was ripe for taking as at Friday, but because of public holiday, I figured that there might not be so much momentum in the market, and that's why we didn't bother to take the trade. But it's still in play. All we need to watch out for is the candlestick price action by market opening tonight. Of course, tomorrow morning is where that's even if market will be very liquid tomorrow because of the public holiday. But I'll be watching out for this pair. I'll be watching out for it. The sentiment is bullish. We just need to take a confirmation to be able to take a sniper entry and be able to manage our risk effectively so that we can push ahead. And look at this. You can as well wait for this mini resistance here to get broken and retested, which I think is already happening. Look at this. This meaning, I'm sure you can see this triangular pattern already. So what we need is a breakout and a retest of it, and we are good to go. So what is the risk to reward ratio for this? So if you take our entry at 1.0988 and exit just before this next key level, so 1.085, that's how many pips. Let's quickly measure. That is 118 pips. So, but if we look at our, let's see what our risk will be. Let's see what our risk is likely going to be. Let's quickly measure that. So that's 52, which is very wide because of our entry. So if we want to put our entry there, our risk, we should put our risk somewhere here. And why are we doing that? Because if this break can retest, it shouldn't come back inside. If it does, then we're probably just going inside or still going to form another leg on that triangle. And we don't want to follow it that long. So it's okay to have our let's just say 20 pips. Let's give it that allowance of 20 pips. So that's 1:5 or 1:6, which is good. But if you want to go all the way here, you are looking at 1 to ratio 2, which is not so good, but it's still not bad. So that's that for Euro USD. Let's proceed. So the next one here is USD JPY. USD JPY. So let's look at this. Now this is 4 hours time frame. So it's okay to see this. The price already hit this major level, and then I believe it's coming down again to break and return back to 129. But then the last Friday saw something different in that. But of course, we are not quickly deceived that the sentiment has changed just because of that. We need to watch for few more reactions before we can conclude that has happened. So, what am I saying about that? So, now this strong candle was supposed to be a retest of this minor level so that we can continue our movement towards the bearish, to strengthen the bearish movement. But then what we are seeing, the market close on a retest of that level. So let's watch out and let's see. But like I said, this is most likely the beginning of the bearish movement on this pair. Yes, because as you can see, let me quickly draw this out for you to see. Look at this. So you shouldn't be surprised as a rejection from there. You shouldn't be surprised as a rejection from there. It's a major level to watch. But then I believe it's going to be broken and we can move forward. So I consider this a retest. I consider it a retest. But the candle, the power, the momentum of that candle is confusing. But then I'm not surprised because that was the last day of the markets for the last week. So it's no big deal. Let's watch out for what the market is going to react. But let's prepare for both scenarios. But I'm saying that as much as I have a bearish sentiment on this, we might still go bullish, but I won't take any bullish trade until 135 is broken and retested. If we are going to go bullish on this, I will wait till 135 is broken and retested, and then we know we are good to go. Another thing is this. Of course, this might not be a perfect pattern, but I need you to look at this, looking more like a head and a shoulder. So this is the shoulder, neckline, the head, neckline. So second shoulder is forming, and then for whichever way, I'm holding a very strong bearish sentiment on this, and this is what I see. Break of this, retest of it, or anywhere around it, and then we watch out for price action, candlestick price action, candlestick pattern, and then we sell to 12965 or shortly before it, so that we don't get trapped. So that's that for USD JPY. The next thing here is Euro JPY. So if you have a special offer, you have a pair you want me to review, kindly drop it on the chat. So I'm going to just review few more, and then I will review maybe 2 more, then we'll check 2 or 3 crypto pairs, and then I will take questions, discussions, and all of that. I don't want us to spend beyond our usual 1 hour, even as we engage ourselves on questions, clarifications, and then gisting and everything. So it's okay. So look at this. Let's go to the daily candlestick to bring it down a little bit. Now, what can you see? Now, this is strong. This is a very strong bullish momentum, and you can see that this the last trading day of the week ended with a bullish pin bar. With a bullish pin bar, telling us that we are not good, a bearish movement is not good to go. But I won't take that. I would rather watch the market. I would rather watch out for a double top, because everything that goes up must come down. I watch out for this double top and then wait for the neckline somewhere around here or here. But what we are looking for basically is what? We are looking for a good price action candlestick pattern to back up our bearish momentum or bearish sentiment, so to say. So if we see a candlestick bullish, bearish engulfing all of that around this place, sitting well on this key level, then we may be good to go, and it will be a sweet trade because our TP1 will be on 145, our TP2 will be on this major level 143. So it's a good one. It will be a very good one. But then, and if we are going to go bullish also, we want to wait for 147 to break and retest, and then we know the next place is 149. It's a clear trade, but we need to wait, for it to play out. We need to wait for this trade to come to us. We are not in a hurry. I will not jump on any trade. So which is the next? This is GBP JPY. GBP JPY, one of my favorite pair, also closed with a pin bar. It's also closed with a pin bar. So same thing applies. Let me not just waste our time unnecessarily. Same thing applies here. We watch out for a double top, which is always one of the easiest patterns to trade. We watch out for a double top, or we watch out for break of 168.52 and retest of it. That's all. So the last pair for the night, the last FX pair for the night will be Euro GBP. Seems all Euro pairs are the same. Same thing. So watch out for a double top, or wait for 0.8866 broken and retested. Okay, this is slightly different. All the USD. So for this AUD USD, I would rather say I have no comment at all. Let me rather not put a comment at all, because it's not a must we trade. It is not a must. But if it is a must to trade, I would say that let price leave this. Either it breaks it. Let me go to 1 hour and zoom this out, and let's see what that looks like. You see what I'm saying? See, this has been playing here. So it's easier for it to bounce or come down. So even if it bounces, it's not going to go far. So I'm not interested in that trade. So before I can get, really interested in HOD USD, we need to see a break of this. If it's coming down, let it come down. So we need to see a break of these this channel. You see a break of this channel. Which looks more like a falling wedge. So break and retest, and then we'll know where we are going next. So until then, if we break and retest this, we know that we are going to 0.6252, which is cool. But until we have a breakout of this channel or price on any of the edge of the channel, I don't think I want to take any trade within the channel. So that's that for the forex pair. Let me check. Let's check crypto pair a bit. Okay, let's start with Ethereum USD. Let's start with Ethereum. Daily charts. So all we need is to count the market structure on this. So let's count the market structure on this. This is the low, this is the high, this is the higher low, this is the higher high. We are experiencing another higher low, which we are expecting to come. Okay, let's just extend this instead of doing another one. Don't need to draw another one, let's just extend this. So makes a lot of sense. So we are waiting for another higher low around 1762, 1763. So once we get there, we can watch out for price action there, and we'll know the next thing to do. That's that for Ethereum USD. Let's go for the next. BNB USD. So count market structure as well. This is the low, this is the high, this is the higher low, bit of higher high, higher low, higher high. So this so-called higher low is not going higher actually, but we can obviously see a pattern building up here. Let's see if we can make it a channel. So for now, let's just watch out. Let's just watch out for these two key levels, and let's see what price is going to do. So let's check BTC, Ava Polygon. Okay, let's see gold. Then after gold, we look at BTC. Gold, the original money, the true money. So gold is trying. Wow, can you see that? Are you seeing what I'm saying? 3 months. Let me go to 12 months. Are you seeing what I'm saying? Gold has not been this high in the last, you know, several years. I know gold is going to fall a bit, but there is strong fundamental behind gold rising. But the question is, we could break this 2071. I don't think in this recent history that is captured on this chart, gold has never broken that price. And now we are there again. Now we are there again. We are there at that price again. We go break this price. So I have no play for gold. But if you must take gold, regardless of what you say on it, just take a buy without stop loss. With less margin and a good liquidity, you win. Because gold must touch that price point again. I know there's a mini head and shoulder forming on this gold, but notwithstanding, the fundamentals are strong. And there are a lot of people, a lot of happenings, a lot of things happening in the world. It's making it look like gold we have to break 2071. Actually, all of the things happening in the US and around the world. Many countries are not buying gold to back their national, their own currency and all of that. So we have a lot of reason, a lot of play for gold. But my question is, technically speaking, will it break 2071? Because it's already rejecting before getting there. So let's wait and see time. We are in a very interesting time. So let's look at BTC as we round up for tonight. So recently, BTC made all of these gains, and then we have to say a few times to be careful, because what will bring BTC down will bring it down, and gradually we are back to where we are talking about, or not even there yet. So, but we need to look at this major level that we are. So what is going to happen from here? That's the question now. What is going to happen to BTC from here? As you can see, this sentiment is very bearish. But then, we won't take any trade just because of that. We'll wait for a break and a retest of this level before we take anything, before we do anything on BTC. So that's that for tonight. Any other suggestion, any question, any clarification, anything you want to share with us? I'll be waiting to get them I'll be waiting to get them, get back to the music. Okay, I get that. I get that clearly. Gold and US oil. So I've checked gold. So let's go to US oil. So US oil. So let's check US oil. People are rich. Oh, you are trading oil. So you are not Tedola and Dangote. You are not meat. People should invite me to your WhatsApp group. Oh. I mean, all you oil traders. So let's look at US oil. There's an index I'm currently working on, or should I say I'm working on, or currently practice. I mean, um, testing. That's the right word to use. You know, I know a lot of you want to trade boom and crash, but because of the troubles you get from binary, derivative, you've not been able to do that. So you don't have to go to derivative again. There's a broker in Nigeria that you know enables you to trade volatility index. So I'll be sharing it when I'm done testing. So this is oil. Because I've not traded it before, you can see there's no markup at all. Let's quickly do our markup. Do we have anything like this there? Obviously not. So these are the major key levels on oil, but we can as well have a good one currently where price is playing. So there's an obvious price jump in here. So if you look at it, in the last few days, oil has been falling. Let's go to H4, 4 hours. So like I said, I will not take a trade in between. Especially if we look at it this way. If I delete this and make it a single line, we will see that we're probably in a horizontal channel. And I will not want to take a trade in the middle of a channel. Now, the most important thing I found out in trading is to write your own rules and stay with them. So I won't take a trade within this channel. No, I won't. So let price get to where it's going and let's see what it's probably doing. But then if you ask me to guess, this is what we are likely going to see. Price come back here. Then we see you go back up, break out, retest, and then up we go. But let's just say go here first. That's what I see. But you know, it is there's no basis for it basically. There's no basis for it because we could as well see something here. We could as well see this go out and then retest and then break and then retest and then off it goes. But it's not likely price oil will go down. With what everything that is happening, it's not likely price oil will go down. So, but then we follow exactly what we can see on the chart. We follow what we can see on the chart. So what I can see, or what I think might play out, is an inverted head and shoulder that is playing out. If I'm going to take a bet before price action shows up, this is what I'm going to place on it. So this is the head, this is the left shoulder. We wait for a right shoulder to form, then D forms the neckline, break and retest. So how do we take the trade? If market comes down to the edge of this shoulder, watch out for strong price action. If we see an indication, we take the trade. But you know what is more comfortable? If we see price come down to here and give us a very strong double bottom. A very strong double bottom is more dependable than taking the trade on the second shoulder of an inverted head and shoulder. So double bottom is one of the strongest patterns that plays out on any instrument around the world. Double bottom, double top, triple bottom, all of those things. So I will prefer a double bottom so that we can have a very strong basis for the next upward movement of oil. So have I been able to answer your question? Have I been able to do justice to what you requested for tonight? So okay, I will answer your chat on the groups. Okay, if you're on the access session group, I will answer your question. If you're on other groups, I will answer your questions. But then it's now already, we need to call it a day today. So let's have a question that is generic. I can answer here. Thank you guys for showing up. Thank you, and have a profitable week ahead.